Have you ever felt like the financial markets are a rigged game? For years, multi-billion-dollar hedge funds have had a secret weapon: advanced quantitative models. These are complex AIs and algorithms built by teams of data scientists that predict market movements with incredible accuracy. This gave them a massive, almost unfair edge over regular traders. Well, what if you could access those exact same tools? What if any developer, any DeFi protocol, or even you could use hedge fund level intelligence? Hey everyone, it's Chris, aka the DeFi Professor, and this is where Bittensor Subnet number 50, Synth, comes in. It's a new project that is taking these exclusive, powerful tools, decentralizing them, and making them openly available to everyone on the blockchain. In this video, we're going to break down what Synth is, how it works, and why it's poised to change DeFi trading forever. So, how does Synth get these elite financial predictions? This is the most exciting part. At the heart of Synth is a massive, decentralized competition. Every single day, over 200 independent data scientists from around the world compete to create the most accurate financial forecasts. These aren't just employees. These are what we call miners on the Bittensor network who submit their predictions. The system then scientifically scores every submission, and the best forecasters, the ones who are the most accurate and consistent, rise to the top and are rewarded. This constant competition means that the system gets smarter every single day. Since launching in January, this competition has already helped Synth significantly reduce prediction errors, citing a 33% average improvement in September alone. Now, these data scientists aren't just guessing a single price. They're providing something far more powerful called probabilistic distribution forecasting. I know that sounds complex, but it's actually very simple. Let's take a traditional forecast, what most people do. It's a single guess. It sounds something like Bitcoin will be 120,000 next week. If it's not 120,000, the forecast is basically useless. A probabilistic forecast from Synth is different. It gives you a full range of possibilities. It kind of sounds like this. There's a 60% chance that Bitcoin will be between 108,000 and 115,000, but there's also a 25% chance it drops below 105,000 and a 15% chance it rises above 120,000. See the difference there? Instead of one guess, you get a complete map of the future. This allows you to truly understand uncertainty, volatility, and most importantly, risk. Right now, these data scientists are competing on four key assets: BTC, ETH, SOL, and gold. And they are processing over 160 million data points per asset per day to do it. Okay, so Synth collects this incredibly powerful predictive data. Who is it for? And what can you do with it? This is where it gets practical for everyday DeFi users. For DeFi perps traders, you can use Synth's data for smarter leverage management. Imagine knowing the probability of a huge price swing before it happens. This can help you avoid getting liquidated. For liquidity providers, or LPs, if you provide liquidity on a DEX, Synth can help you set better, more profitable price ranges for your funds. For options traders, this data is perfect for pricing options more fairly. For prediction markets like Polymarket or Kalshi, Synth's data can be used to set accurate real-time odds on market outcomes. For DeFi protocols, they can use this data for smarter treasury management, especially when dealing with volatile native tokens. Now, I know this all sounds great in theory, but does it actually work? The Synth team decided to put their money where their mouth is. They did an experiment where they took a $2,000 test account on the prediction market Polymarket. Using only their own probabilistic forecast to make decisions, they executed around 12,000 trades with a total volume of $500,000. And the result? Over just 4 weeks, that $2,000 account generated a 110% return, which is very impressive. They publicly proved that their data provides a significant profitable edge. And now, they're building an even faster dataset for high-frequency trading. And Synth is just getting started. The potential for this is staggering. Now, the narrow market for this kind of alpha data that hedge funds buy is already worth $2.5 billion. The broader market for all financial data that quants use is around $44 billion. Synth is building an open, on-chain solution to tap directly into this massive industry. And their plan is to grow fast. They're planning to add one new asset per month with a roadmap to expand and cover the top 75 tokens in crypto. But here's the most mind-blowing part. They'll be using the agentic economy. A new wave of on-chain AI-powered agents is coming. These are autonomous bots that will trade, manage risk, and interact with DeFi protocols all by themselves. And what do these agents need to make smart, intelligent decisions? Well, they need reliable probabilistic forecasts. Synth is positioning itself to be the core predictive intelligence layer for this entire new economy of automated on-chain AI traders. So let's wrap this up. For decades, Wall Street has kept its most powerful predictive tools locked away in a black box. Synth, with their work, is breaking that box wide open. It turns Wall Street level quant tools into an open, decentralized on-chain resource. It's empowering everyone from individual traders and DeFi protocols all the way to the next generation of AI agents. This is the democratization of financial intelligence. If you want to dive deeper, see real-time dashboards, or learn how to access the data yourself, be sure to check out their website at synthdata.co. You can also find the link in the description below. Thanks for watching. Don't forget to like and subscribe, and turn on those notifications so you can find out when I'll be doing more deep dives into the future of crypto, Web3, and decentralized finance. This has been the DeFi Professor, and I'll see you in the next video.